Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner's Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA. EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Recording in progress.
Hey guys, good morning, welcome everybody. Good morning, welcome to Stocksnipertrading. My name is Ronnie, my partner is Dave. Good morning everybody. It's Friday, June 16. Happy Friday, Juma Mubarak to everybody that celebrates. Welcome guys. We're going to look at US 30, Dow Jones, we're going to look at NASDAQ, and we'll look at gold. We don't have access to Bookmap again today, it's still down. I'm right now, we're getting in contact with their support team right now. They're emailing us, and I'm like, we're on live right now, so it's not going to help us right now, but hopefully we can get it corrected over the weekend and get everything fixed up for next week. So anyways, we'll trade without it. We don't need it. We didn't have it for FOMC. We did good. We didn't have it yesterday. We did good, and we don't have it today, and we'll also do good. So we don't need to have it, but it's nice to have. But we'll go back to the way how we used to trade without live liquidity. So welcome everybody, and thanks for joining. We appreciate all of you guys. If you guys can hit the like, subscribe to the channel, and the notifications so that you guys are informed when we go live, and you can help grow the channel with us. So welcome guys. I hope everyone's having a great week so far, okay, in trading and just in general a great week. So if you're having a good week in trading and you've maybe exceeded your weekly goal, then maybe Fridays you need to take a little bit easier when you're trading. Don't over leverage, don't over trade, don't over risk, don't blow up what you already have going on. If you've had a difficult week, then same thing with you. You don't want to make things worse than what they are, so you need to trade with proper risk management. For traders who are having like a so-so week or maybe an unprofitable week, you need to learn how to go over your and review your trades. You got to learn from it, okay? We cannot stress this enough here. If you think we're joking, or if you think it's you shouldn't be reviewing your trades, or you think a journal is a joke, that's up to you. That's completely up to you. But we're just trying to tell you that it does help. It's helped us in the past when we were struggling as traders. I didn't believe in journaling myself either until finally I sat down and said, okay, I'm going to start to journal and figure out what this is all about. And I learned so much about myself. I learned so much about myself that I couldn't believe. But now, when it's on paper, you can actually see it physically in front of you, and you know exactly where your mistakes are, you know exactly what you're doing well, and then you got to capitalize and fix those things, okay? So, sorry to start the call like that, but we want to see you guys do good as traders. These are the steps that you're going to have to take if you're not doing them already. And if you are, and you're still not doing well as a trader, then we got to dig deeper and deeper and find out why. Why are you not doing well? Okay. There will always be an answer to a question, so you can figure it out. Okay, so I'm going to get started, guys, with US 30, but before we do that, let's take a look at Forex Factory. Let's look at our news today. So today is right here, Friday, June 16. We've already gone through the London session over here. Now we're moving into New York. So we have at 7:45 a.m. Eastern, in the next 10 minutes, we have FOMC member Waller speaking. So we had the FOMC, we had Jay Powell, we had him do what he's got to do. Now they have speakers that come in that are part of the committee, and they talk. So it's an orange folder, so there will be medium impact volatility to the market. If there's any securities that you're trading, just keep in mind that we have an FOMC speaker at 7:45 a.m. I will be doing top-down analysis here. Then we go into 8:30. We have some Canadian news. Normally we have US folders at 8:30 a.m., but today is just some Canadian news. Foreign securities purchases, wholesale sales month over month. And then we get into 10 a.m. Right over here we have the red folder. So 10 a.m. is the new hourly candle in the market. And prelim University of Michigan Consumer Sentiment Report will be coming out right here at 10 a.m. And that's what it is for Friday today. It's a pretty light Friday. And Monday, guys, Monday our US banks are closed. Just to show you right over here, in case you are not aware, all day Monday, June 19, US banks are closed all day. Okay, so the stock market will be closed. Some financial securities might be closing early. So this is part of your due diligence. This is part of your homework over the weekend. If there's a specific security that you're trading, you might want to see the hours of operation and when it closes, if it's open. This is June 19th or whatever it's called over here, is the bank holiday. Okay, so that's Forex Factory. Now let's take a look at US 30. So we're going to go now full screen. Can everybody see my screen right here? So we're on a full screen of US 30 on the 5 minutes. Welcome everybody. Welcome Sarah. Welcome Brad. Abu, welcome. Welcome guys. Welcome W. Moore. Juanito, welcome. Anthony, welcome. Charmaine, welcome. Can you guys all see my US 30 chart? Yeah? Okay guys. Okay, so what we're going to do is, if you are in any active trades right now, please manage your trades. I'm going to be doing a top-down analysis. I'm going to try and get the 3 charts done, US 30, NASDAQ, and gold, all within the next maybe 45 minutes, so that we can go into 8:30 with these being done, and we can go into COMEX market. So here we go. This is the daily. Okay, we've had this uptrend. This was NFP Friday right over here, the start of the month, June 2nd. We had that bullish day, pull back to about 50% of it right here, and since then 1 2 3 4 5 6 positive days, making higher highs and higher lows. Then we had the retracement come down midweek, this week, Wednesday, midweek, and it came back up to right here. And this is how we were trading yesterday. Yesterday was a big bullish day in the markets. Maybe the way how it's reacted after FOMC, because they were pretty dovish right now by not increasing interest rates. So maybe the market is taking advantage of that right now in going into the next month. But there was a positive move yesterday. It was really, really nice. There was a short squeeze going on all afternoon when we were in our call, and then it started to retrace right after we end the call, a little bit during the power hour. Okay, so I'm just going through my motions right now. That's the high and low of today. So that's our daily candle, and all I'm looking at is the high, which is the high wick right there. I place a purple line, the high of the day 34,456, and our low of the day approximately 34,358. And we're trading now inside here. So if we come back up to the high of the day and we break out, there was yesterday's high, almost 34,500. So let's mark up yesterday's high as well with a yellow now. Okay, so I use purple for my high and low, and I use yellow for other critical areas. Okay, so if we do push up to this yellow line, yesterday's high, you see how the chart is black up here, so I have nothing. So we have to go back to the left of the chart, and I can see this impulse break right here on February 14, and I can see this huge impulse right here on December 13, and then I can start to see some volume over here on end of November, early December. So I'm going to place another yellow line right there at the body. And then I'm going to start to place like a red box above here, because we have no more volume closing above here. They're all impulse breaks, but I want to bring it right to where we're trading at. So you see how we're trading right here. Just in case we come up to this box, it might get rejected. But I'm going to change the color to red to signify that it could be resistance turning into supply coming into the future. We're not there yet, but if we do get up here, it may come up and get rejected. If it impulsively breaks through this red box, then it's possibly going to come up to this wick right over here, 34660, right there. Okay, and that's good enough for now. Okay, our volume is down here now. If it starts coming through here to that yellow line, then we're going to have to come back, and then we'll start dissecting this candle and then this volume over here. Last time we were here was April of 2022. Okay, so we'll see. Maybe we get a retracement today, but still it's got bullish volume in it, so you can't really fight it. We have other critical levels right here where we closed yesterday and where we opened. Let's draw a yellow line right here. Okay, so we're going to put a yellow line right here. And in the zone here, see the yellow to the purple? If we want to go halfway, the candle is basically right at halfway. I can draw a yellow line right here to kind of give me where 50% is. From here to here, there's half of it. But to be real specific, here's the purple, here's the yellow, here's the one I just placed. I can see now price action to the left of the chart. There it came up, and you see where it got rejected and pushed down. Some traders will go a little lower. You can go absolutely right there. That's one zone if we go below, but one right there if we want to cut everything in half. So if you want to go a little lower too, if you want to have another yellow line, you could go at this wick and that body right there. So you have a little more in case it comes down. So we're trading right here, 34418. If it comes down to that yellow line, it's 34397, about 20 pips. And then if it comes down to the body, and we're about 380, another 20 pips. And then we come down to the low of the day, 357, and we'll see if we can hold it there. If not, if we can't hold today's low, then it will break, maybe push down to this area, 310. And in here, there's a zone 2, purple to yellow. If there's nothing, look to the left of the chart. And then you see over here, now you start to see some bodies and things like that. So again, you can place lines in here if you like. You could go right at 50% if you're not sure of where to place it. So the purple to the yellow, if you want to go in half, again like this, you could go right in half. Eyeball it yourself and go right in half. Okay, that's if you have no idea where to place a line. That's what you can do. Just go halfway, a 50% retracement. When in doubt, cut it in half. Okay, but another big thing that I want to mark up is from this body to this body yesterday, where's half of it? It's approximately right there and right by that wick. So I want to know where half of yesterday's big volume was, because I want to place a green box at that level. And when I look to the left of the chart, I can see this was all supply over here. And then if I bring it across, there was that impulse breakout right there. But if I bring it across here, I can see it got rejected there, but now the volume is above. So I'm going to bring this box across and make it green at the halfway point from yesterday. So that's approximately half of it, the body, okay, from here to there, that's half of it. So if it ever does come back, retrace to about 50% of this big bullish day yesterday, then maybe it's going to come down, maybe catch a wick and go rotate right back up. If it breaks, then it will come down to these next levels. Okay, so that's good enough for daily analysis. What does our daily candle look like? So we closed here yesterday, we opened, we came down, we retraced, we were bearish, but we made a higher low. We continued to come back where we opened, we pushed up all the way up to our high of the day. It's a lower high from yesterday, so now it's getting pushed down, and this is where the volume is right now. Okay, so I'm going to move into the 1 hour now. So this is the analysis on the 1 hour. You can see the big move yesterday, right at around 9 a.m. and it continued to push all the way up. This was, when we were trading 2 p.m. yesterday, the bullish squeeze, and then going into power hour. This is when I marked up that area on the chart to tell you guys maybe watch that area to sell, because power hour, you see how they brought it right back down. Going into the Asian session, we consolidated, then we started to come back up at midnight, then we went 1 a.m., 2 a.m. is pre-London. London opened up, and then 4 a.m. we pushed again. 5 a.m. lower high, didn't get up to here, and now it's coming right back down where it's kind of consolidating right in here. Okay, so we're going to mark where our hourly resistance is. We can see we got rejected right there. So we're going to place this as a red box going across just to let us know, give us a heads up if we're coming in here that it is a hourly resistance in the market. Okay, we've got a little bit of hourly support now holding at this daily area at 34,380. We're not breaking. Well, we broke impulse break, but then came right back up. Is any volume closing below here? Not yet. So let's mark this area with a green box just to let us know that it's still holding here. We're not breaking. Support. Okay, then this is where the volume is now trading in between green, red, green. We're inside here in this consolidation. Okay, so this is what's called a flag pattern. This is where they kind of pinned it up here yesterday in power hour. They pulled it right back down. There's our neckline now. Okay, our neckline is here. Came back up. Did it come back up for the double top or a higher high? No. So it's a lower high. So they're lowering the supply. If I bring this across, see how it's about 50% of the bearish candle in power hour yesterday, and bring it across, and you see we came right back into it and getting pushed down. So that's why I like to extend these boxes into the future, because they may come play in the next few hours or the next day. So what we're going to look for is hourly volume. If it can break out of here today, continue to go make highs, or if it breaks down here and starts to retrace down in here, we can maybe scalp this zone too, but that's why we're going to go to the lower time frames, the 5 minutes, and we're going to watch what the fives are doing. Okay, so you remember yesterday how bullish it was, continuing to make those highs, then came over here 3 o'clock, see the big red candle start to close below, came back up, now lower highs, they pushed it down, back up, and then finally a little bit, but that's kind of when that big squeeze ended, around power hour yesterday. Okay, and this is what we're trading currently in the market right now. So we came up, double top into this red box, pushed down, came back down into this green box, kind of pushing right back up. So if we want to scalp now inside here, I can see that the volume now is contained in this daily and this daily area right over here. If I really want to get tight and box this in, I could box this area right here. It's not the greatest area to be trading, but I know that some of you guys like scalping. Okay, you can see that there's a little bit of a trend pushing up right now from the bottom over here. Okay, so we did break out impulsively up to here, right up to this price action, and we got rejected. So if we do come back above here and we close above and we look for a buy, I measure the move. Okay, again, like a worker, construction worker, or anybody that has a tool belt. Traders have their tool belt as well. So this is our ruler. So the previous impulse move came up 10 pips. If it goes up to that red box, it's about 25 pips. So if you're going to take this trade, you have to be aware half of it is about 13 pips. To the top is about 25, maybe 30 up here if it moves up there. Okay, so if you're looking for that scalp, okay, you got to look for some volume to close above here, or you might be taking an impulse move if it's kind of accumulating where it's going to break out. This is more of an aggressive area, again, to trade in here. It's very aggressive. But some traders, scalpers, like to trade inside here because this is what they look for. You know, they're looking for not 100 pips. They're looking for maybe 10, 15, 20. That's what they're looking for, okay? So that's more of the aggressive approach. Again, if that's not you, if you're not an aggressive trader, then you got to wait up here. You got to wait up at the daily high to see if it breaks out, closes, and maybe has like a short squeeze up here, or it comes up to the red box and cannot break this, and then maybe you're going to sell down. You're going to now be a seller, okay? But you got to judge what's going to happen at these critical blocks in the market, okay? So you either got to wait patiently for it to come to you up here, or the aggressive approach could be trading in here. You don't have to go big sizing, okay? You can go small. You can do feeler trades. You can test out what it's like in here. Even just test to see if this is kind of like your trading style, okay? Just if you have to get in a trade, you don't got to go a huge trade. Just something small, test it out. You might say, Ron, I like scalping in here, or you might say, Ron, I hate scalping in here. But that's something you need to decide. I don't want to decide for you. I know what I like to trade. Like I've decided myself over the years what I like to trade. But this is something for everybody you need to decide, okay? So these areas are a little bit more aggressive. Same with going down here. So if it breaks this trend line and closes kind of below here and comes back down to the green box, if I'm going to sell that, I'm measuring the move from here down to here. It's about 20 pips, okay, into the green box. And if it comes down here, like here, it came red right in the green box and went right back up. Here it came right down to the green box, touched it, and it went right back up. Here again, it came down and then got a wick and went right back up. Came down and it's going back up. So it may come down, back down to the green box, and then you got to make a decision down here. Just like down here, you had to make a decision here. Here you had to make a decision. Here you had to make a decision. Here you had to make a decision. If you didn't, then you're holding and draw down on all of those cells. Okay, so that's another aggressive area right here. If you're looking to take that scalp sell back down into the green box, and we just measured it, approximately about 20 pips. If that's too aggressive for you again, then you got to wait down here for a potential sell today. Place an alert. You don't got to watch it. You can place an alert, and when it comes in the green box, it'll alert you ahead of time, and then maybe you're watching it. If volume closes below here and we flip this red, yes, it might come down and break the daily low and drop a little further. But also, if you're waiting in the green box, if there's no sell, when it comes down, if this is too aggressive and it bounces off the green box, comes down like this, maybe does something like that, then where you're selling down here, you could now start to be a buyer right there and start to bring it right back up, okay? So these are just areas, points of reference where you could possibly trade depending on your style of trading, okay? So right now we're still inside this box. It's still building. I see it come down, higher low. It's still building in here. This will start to open up as we go into the new hourly candle at 8 a.m., but that's where US 30 is right now. It's still not the greatest to be trading right now, but there is some pips to be made. Okay, so we'll leave US 30 right over here. I'm going to go a little bit faster with our other charts. I'm going to do NASDAQ now. Okay, so NASDAQ, this is all tech related. Okay, so right now in the 5 minutes, trading nice. Okay, we came up here, couldn't, look at like a triple top up here, equal highs, can't break. So pushes down, comes back, lower high, push down, break the support, drop a little bit more. And then it's coming right back up, broke this highs, new highs, now it might be coming down. So let's see how it's moving on the daily. Okay, so Nasdaq is very, very, very bullish on the daily. Okay, like RSI is completely out of control. Okay, if you follow RSI, it's 79 on the daily. We don't need an RSI indicator to tell us that this thing is getting overbought. Look at the entire move: higher highs, higher lows, higher highs, higher low, higher high, higher low, back down to a higher low, double bottom, and then breaking out of here. Very bullish. So yes, Nasdaq is performing a short squeeze on the daily. Most swing traders that are trying to sell right now are getting ruined in the market unless they have a lot of margin to hold this type of drawdown. Okay, so you got to be careful. Did any red candles close below any critical levels? Not really. Okay, so it's very difficult to be selling this right now. Okay, so that's our high and low today of Nasdaq. 15,230 approximately is our high, 15,123 is our low. It's about 100 pip range. Okay, and then another critical level is right here. I'm going to place a yellow line right there, and it's right in the middle. Okay, it's right there. Did I just place it in the middle because I wanted? No, I went right here. Where did we close yesterday and where did we open today? So that's a very, very critical area of volume in the market, the transition, and it just so happens to be right in the middle of the high and low of the day. So if we continue to break out, we're almost at our high of the day. There's yesterday's high right there. 15,248, about 15,250. Okay, so I'm going to place the line right at yesterday's high, yellow. Okay, and then again, to judge what's up here. Black chart, we haven't been up here in a long time, so we got to go to the left to see what's above that yellow line. And when we get up there, we've got this impulse breakout on end of March 2022, get rejected. We had this impulse candle breakout on February 2nd, my birthday right there, and get rejected. So what we're going to do is maybe identify again these areas right here. Okay, but now what I want to identify is that rejection and that rejection, and we're really, really, really overbought on the daily. So this could be supply. If I bring this big red box across in these two yellow areas, you see how we're coming right, we came into it yesterday and today it's like a lower high, but if we come back into this red box, might be like maybe forming a double top. So we got to know that this big red area is in the past we got rejected there and we got rejected right there. If it impulsively breaks through here and continues with this bullish momentum, then maybe it's going to come up to next area where we have some bodies right there. So I'm going to place a yellow line right here. Okay, and that's 15,300. That's good enough for now. Now what we got to look for is what happens if we retrace down today? What happens if the selling pressure on a Friday maybe pushes this down a little bit? Okay, so our volume is right here, and we have all of this green volume below us. So if we're looking to the left of the chart, we can start to see some areas that maybe it may come down to and hold. Like right in here where we have some bodies. Okay, if you can't read this stuff right here, you don't need to, okay? Then what I would do is, again, remember, when in doubt, if you don't know, read the tape. Purple to yellow, and then identify where you think is half of it, okay? From the purple to the yellow, okay, right there. That's about half of it to me. There's purple and the yellow, and that's about half. Okay, so when in doubt, if you don't know how to read price action to the left, then just go half of it. Okay, that'll give you a good judgmental area of where it could come down to. If it's a nice whole number as well, 15,200 is a nice whole psychological number, then you know it's probably a good area where you've placed it. Same with right here, from the yellow down to the purple. If you can't look to the left and identify where to place like a line, I can see right there to place a line at that body right there, maybe at that wick right there. So I could place a line right there, exactly right there. If that is difficult for you to learn how to do that, then remember what I said right over here. Go from the yellow to the purple and then just identify what you think is half of that move, and it's right there. Okay, same with here. From the purple coming down to the body. First of all, we should always know where critical bodies are in the market, and sometimes we're going to get gaps. This one closed right there, so it should have opened right at the L line. It didn't. It opened a little lower because it gapped it down. So if you want to be right at the gap low, right there, you could be right in the middle. It's all personal preference, wherever you like. But here you see the purple to the yellow. So here's that big gap. If I don't know anything, again, guess what I'm going to do? I'm just going to put it right in half, where I think half of it is, right there, okay? Real easy, keep trading simple, but if you want real confirmation, you look to the left of the chart, and then you see the purple, the yellow, and then you see where I placed it, right in half, and it gets right perfectly that wick that got rejected, and the body right there. So even the halfway point is pretty accurate, okay? And that's good enough now for this, but I also want to mark half of this, 50% of that candle, like right there. Just in case we come back down here today, I want to know that there could be some demand still holding yesterday's big bullish candle. We came down today, came down here and got the wick. So what happens if we come down again? Maybe we hold in here, and then the next demand zone for NASDAQ will be right below here. Okay, so those are like our zones. We've got our daily levels. We opened, we came down, picked up liquidity, we're coming up, but we didn't make a new high, didn't break for a new higher high, got rejected at the lower high, but the volume is still building, so it might be coming up to test the high again. Let's check out the 1 hour candles. Okay, so this was FOMC, big liquidity grab to the low, they came up, came back down, kind of like a double bottom here. Yesterday they pushed it really strong out of here. We came up again at the end of the day. Okay, so we were pushing up on US 30 and NASDAQ, the squeeze, and going into power hour was the retracement sell-off. Okay, and then we held here. We're coming right back up. London market. London was right here. We pulled back. This big bullish candle at 4 a.m. ignited, continued to push up. Now we're just trading inside here, consolidating. We're starting to get some wicks now, starting to get rejected at these crucial points right now. So where are we getting rejected? We're getting rejected right here on the hourly. We'll get to gold, guys. One chart at a time. You guys got to learn discipline, patience. If you can't wait for 5 minutes for a chart, you're gonna have a difficult time trading these markets, guys. Believe me. Okay, and then over here, if we extend that to the left of the chart, you can see we're coming into that body of 3 p.m. Eastern yesterday. Okay. And now it might be performing a double top where it came up one time. There's our neckline. Coming back up again. Might be a double top up here. It might push down, but needs to break this trend line. Okay. So if we go to the 5 minutes now to see what's going on here. There's like a double top rejected. Broke the neckline just a little bit. Came down but came back up. And then they really pushed it down. Okay, so you can see now NASDAQ is getting rejected in here again after it made a new high, came up to the top of it and got rejected. Okay, so it might pull back in and then we might look for another potential sell. So maybe below this daily area is where we can start to look for some sells down here. You see how these bullish candles held right there. So I'm going to draw like a green box here just to show us that if it comes down there, it might bounce, come back, and then bounce right back up. We want to kind of get it to get rejected here again at the red area, then push down. Because if it pushes down below here, then maybe we can continue maybe selling the market with this move. Down to the next daily. Again, that's a full zone fill to the daily. Measure it. Okay, that's about 25 pips for NASDAQ. And then you got some price action to the right over here that was kind of like a support right here. That kind of started that move. So maybe when it comes down to the trend line into this red line, it could come down here for about 12, 13, 14, 15 pips, catch a wick and rotate right back up, or break here and continue to come down to this low. Okay, so that's one idea for maybe possibly selling NASDAQ down here later this afternoon. See where we came up here and got rejected. We came up and got rejected. If we come up here later on, who knows? Maybe Friday is another squeeze day and they just keep pumping it. If we close above here, then we might fill up to the next daily range right up there. And I measure the move, so I know if I'm trading NASDAQ, how big of a move is that? That's again 20 pips. Okay, right up to there. Half of it is 10. Half of it is probably right there. If I want to look more accurately, look at right there. Last time we broke through there, see the red line where I placed in half? If I bring it across now, if I want to go right to those bodies, I can go right to the bodies. Okay, I see the body, and I see just those impulse moves above us with no volume up there. Okay, so looking to the left of the chart tells you a lot about price action. Now we could be consolidating in here. Again, this is like a neutral area if you want to use like a neutral box to show you that it's in here. And this red box too, if you want to be an aggressive scalper, you can definitely lower this and start scalping in here if you like. Just measure that. If it comes back up to there, to that red line, how many pips is it? It's approximately maybe 10? No, a little more, 12. Okay, so if you want to trade that, you certainly can. But this is more, if you're a conservative trader, you're waiting up there. Okay, so that's NASDAQ, guys. It's 8 o'clock. We have a new hourly candle in the market. I'm going to finish up gold really quick because we're going to get ready for COMEX market with gold too. Okay, so this is NASDAQ. We've got US 30 right over here. Okay, so US 30 came down red right away at the hourly candle and caught a wick coming right back up. So you got to kind of follow this where it's going to close in the next 1 minute. It's still in this consolidated zone, so it's trading just like NASDAQ inside here too. Okay, so let's finish up gold for everybody that likes gold. Let's get a like on YouTube for gold, okay, because I know most of you guys, that's all you guys trade here. So we're going to do a gold top-down analysis, but make sure to hit those likes. Subscribe to the channel, hit the notifications. We're giving free nuggets over here, guys. We're trying to help you guys out for free on YouTube. Okay, so all the gold traders, you guys tell me, you guys trade gold more than me. What is gold doing right now? Gold is consolidating in this very tight range. It's been consolidating for weeks on weeks in here, okay? So what happened yesterday? We broke down, picked up liquidity at 1924. We came back to 1960s. Today we opened up, small pullback to 1953, holding 1950, this psychological area, and now we're at 1966 right now. Maybe going to take out these wicks over here if there's enough volume. So let's go on with our normal routine. What we do, I mark the high with a purple line. We're right at our high right now as I'm speaking. Okay, I mark our low of the day with a purple line. 1954, 1967, low and high. Okay, it's a $13 move on gold. That's 130 pips. Other critical areas. If we start to break out bullish, where are we going? Well, we have 1, 2, 3, 4 impulse breakouts that broke out here and didn't close above there. Okay, so we got rejected up here. So it's telling us that there is some resistance, there is some supply up here. Every time it comes up to 1970, 1971, rejected, 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 rejected. Okay, so that's where possible areas are, and I'm going to draw like a red box up there just to tell me right above those wicks. If it comes up there, that's where we're getting rejected. Okay, if it breaks out of here, we may continue breaking out, come up to these two bodies right here, 1977. And then if it continues, where are we going? We're going to go up to all of these wicks over here, 1983. Okay, and then when we get to 1983, what do we have? We got 50% of that red candle. We got a rejection right there, and those two rejections. Draw another red box right there, just in case it gets up there. Okay, and what happens if we get rejected? We don't even touch these red boxes. Like it's got a little wick right now. What happens if we start depleting this volume and we start coming down? Where could we come down to? Critical areas right here. Let's put a yellow line, body, there's a wick and a wick, and maybe it comes down to 1960 and holds there, and maybe it goes back up. If it breaks, gold is coming down to body 1957, then the low of the day, then it might come down a little lower, where? To right here. Look at the wick, okay, right there. And it's about 50% of the bullish volume from yesterday. So that wick right there. And what am I going to do? Below that wick, I'm going to draw a green box right here on gold. 50% approximately. And if it comes down there, maybe it goes back up. Okay, so gold is very bullish today. Okay, it opened up, small retracement coming all the way up to the high, small retracement up here, and it's pushing to the high right now. Gold is very strong. Let's go to the 1 hour. Okay, see the hourly candles. Okay, so here was the big move right over here yesterday at 9 a.m. COMEX market, Wall Street. All this Asian session consolidation. We came back down going into midnight, 1 a.m. Here's pre-London and London, and since then we're making higher highs and higher lows on the hourly. Yes, it's getting pretty close to being overbought up here on the RSI indicator. We do have a current hourly uptrend in the market. Okay, so you can draw like a trend line if you like, holding this trend. Okay, they're starting to get a little bit thinner, the volume here, but we're going to see how the markets open up in COMEX here. Okay, so where do we have other critical hourly level? Right here. This is a critical level. We got rejected, there was resistance. Here we closed, there was an ignited bar open. That's what we retested, 1963. So I'm going to make it with a white line to represent hourly support right there. Now what we're going to do is if we break above the purple line up to there, what do we have? Okay, look to the left of the chart. You got an impulse, a lot of impulse moves. So up to maybe these wicks, I'm going to draw another white line at 1968. Right here. Okay, so you see how I did that? So we might be moving up to that white line. That's halfway from the purple to the red. It might not happen. Maybe it goes down. Who knows? We'll find out. Let's go to the 5 minutes. Okay, look at the 5 minutes. Okay, here it gets ugly, but they are making higher highs and higher lows. Okay, I'm going to kind of trap all this as much as I can. Okay, I'm going to find where the 5 minute support is. It's right here. Okay, see that bullish candle that started that? We got right there it held, right there it held. So I'm bringing this green box across like this, and we're getting rejected up here now at the daily high. Rejected. Okay, so I'm going to draw a red box going across. Okay, so for potential sells, okay, depends how active you are, how aggressive you are, okay, for a sell. Okay, there is divergence, bearish divergence on the 5 minutes. If this keeps making highs, the strength is decreasing a little bit, okay, so that's signaling, telling us that there could be some bearish divergence, but that doesn't mean anything until volume closes below critical levels. So this is more of an aggressive sell right here, okay, if you want to be below this structure, because it might come down to this green box from right here to there. Might break that hourly trend, come down there. Measure the move. Again, if this is you trading gold and you like that move, that's approximately 15 pips. If it breaks more to the hourly, about 22, then if you get that real break, then it's 30, 40 plus. Okay, that's aggressive. If that's not your style, remember, then you're going to be below. Okay, I'm just boxing this in right here, show you how it's continuing to move higher. Okay, if that's too aggressive for you, then maybe you got to wait below here. Maybe you got to wait for this area to break, and then maybe the hourly area, and then you get that drop. Okay, so this is more for, again, aggressive traders in here that know what they're doing in here. This is the consolidation zone, but right now we're kind of right at the top. So we're going to see maybe it's going to impulsively break out a little higher up here. Okay, so we're right at the daily high, and we got that hourly right up there. It's a nice bullish candle. It's probably going to break out maybe a little bit. If it does, where could it break out? So this is all the 5 minute price action inside here from the purple to that hourly, and I'm starting to see right there it got rejected. So if I'm drawing like a red line to where this could possibly go, maybe right up to here, 1967.40, right there, that red line. Okay, so if you want to continue buying with this, you can. Okay, so if you want to continue to buy, you got to wait for some volume to close above here, and maybe flip this box green, and then maybe you can continue to take it up through here. Okay, so I'll show you potential area, like right here. It's right here to buy. Okay, but you need the volume to close. Unless you want to take a impulse move, breaking out of here right before COMEX. Okay, so I'm going to leave gold right here. Yep, US 30 and NASDAQ are breaking out. Okay, so everyone in Zoom, I'll give you guys these three charts in one moment. Okay, so we'll continue to watch how things are developing. US 30 is breaking out impulsively. This candle is going to close in 2 minutes. Same with NASDAQ, is continuing to squeeze out of here. Okay, so it broke right through here. That's why I was saying if you want to trade this red box, you can. But you got to know what's going on in there. Okay, so I'll just give these charts to you guys in Zoom 1 second. Okay, you should see a TradingView link in the Zoom chat. Rob, do you guys want me to do GU right after? We can do GU like getting into 8:30. Okay, so you see how gold is breaking out, okay? Possibly going to tap that red line. We'll see it up there. But we're going to also watch the close here. It's going to close in 30 seconds. Same close of NASDAQ. We'll watch the close of US 30. Remember, guys, if you're trading to to flip these zones if the volume closes above, okay? Can't always wait for me to do it all for everybody. You got to learn how to do this yourself. Got to go through these motions. See how now NASDAQ filled right up to that red line that we picked and got a wick and got rejected right there. So here's the close now. And it's 8:15. This is also a new 15-minute candle in the market too. So that red box, I'm going to flip green. This is getting ready for the retest. This big red zone, I'm going to momentarily flip it green to see if it's going to be holding as bids. Same with gold. Gold is an ignited bar, ready to maybe test that red line and continue breaking higher. Look at the retest on US 30. Okay, so see how it came down red? As I was flipping the box, it turned green, caught a wick, and then it's going up again. Okay, so that's what a retest confirmation is. You got the break of the volume. It wasn't just like this, like an impulse and then come back close below here. It impulsively broke out, but the volume closed above. Okay, now this is that confirmed that the volume closed above. Now you get the actual retest. See when it opened red, and when the box that I was flipping, this one was red, I turned it green. That's what I mean by a retest with confirmation. And as soon as it gets the wick bouncing off, this is where you need to learn maybe to take a trade. Okay, take a buy. Place your stop loss below there, and if you did, you're in profit right now, and it could be coming up to take out the previous high, and you're in zero drawdown. Look at gold. Gold is an ignited bar, continuing to pump out of here. Okay. You got to learn how to do this every single day. Doesn't matter what security you're trading, okay? Does not matter. Yeah, GU is probably pumping because the US dollar is dropping, guys. I see a lot of you guys are talking about GU. We'll get to GU in about 15 minutes. We'll do it at 8:30. Maybe we'll catch a reversal on GU. Okay, and then this is another thing you got to look at. Did it break the high? Did it create a new higher high? Okay, right up there. Remember the previous high was right there, 34433. We came up, but it kind of didn't break for a new high. So when that happens, the market tends to go down. It gets rejected. But if it keeps building, if it keeps adding bids as it goes down, now it's coming up for another attempt to break the high. So if US 30 can break this high, it's going to probably come a little higher and maybe test this red box. Okay, NASDAQ is coming down red, retesting here. Okay, and then when you're trading, now where we were originally looking for a sell below there, if you want to trade now in the consolidated area, you can as well. If this comes down, maybe closes below here and retests, and we flip this green box red again, then maybe it's going to push down. Maybe we can enter and sell down in here. Okay, and you see how we're coming right back again. Look at it, it's testing the previous high. It's trying to, there's the break, okay, so there's the new higher high, that's the pop, okay, and then there's the continued move. So do you guys see how nice a retest can, if you bought like that body right there, you are up 15 pips, 20 right now, 20 right up to the red box with zero drawdown. That's a break, volume close, a retest with confirmation, and you could have bought that, place your stop loss below here. Now your stop loss is at break even and you're up 20 plus pips right now, and you can be scaling out in this big red box unless it wants to continue to pump out of here, because that's our daily high, the purple. So you see how we're coming right back up. Okay, so that's scalping. Loot, zero drawdown, I love it. Yeah, I love trading with zero drawdown. Okay, it doesn't always happen, but if you're a sniper and you understand what you're looking for, some trades that you're going to take are zero drawdown. Same here with gold. Okay, if you saw what happened, it was an ignited candle. If you took that buy, you're in zero drawdown. It came up maybe 10 pips, but zero drawdown. It's very important. Okay, but then when it comes up to the red box, you need to make a decision up there. Okay, I can't stress this enough. You got to make a decision. Okay, came up there exactly 20 pips, hit that red box, and then got rejected. And next candle they gapped it up, red ignited, and it might be coming down now. Okay, so that's how the markets work. That's how scalping works. If you want more than 20 pips, if you want 30, 40, 50, I understand. Everybody wants that. But you're going to have to now maybe stomach a pullback. You might have to come back down, pick up more bids. Your 20 pips in profit might go down to 10 pips or 5 pips, and then it comes back down. Might even hit your break even where you entered. Then might pick up bids and then go back up. Okay? That's one story that can happen. Or if you're just following price action. You see the red line? That used to be the high, now it's turning to support. It came down, touching the red line, it bounced off. So let's see now if it can collect some bids and continue maybe trying to get out of here. If it's a weak candle, if it's like this little doji, then it's probably going to get pushed down if it can't accumulate more volume right now. NASDAQ is testing the green box. Green, red, green, probably going to break out of here. Look at gold. Here's, okay, 820 COMEX, guys. Look at gold. So you don't want to get married to your buys. You got to know 8:20 a.m. is COMEX. If you guys don't know what COMEX is, it's commodities exchange that's opening up. Okay, so it's a big bearish engulfing candle. If you were in all of those buys right over here since 7:30 and you didn't do anything up there, at 1 minute they take you out of your trade. Okay, we're trying to explain this to you guys every single day. Okay, so we're going to follow how this candle, where it closes, 3 more minutes. So open ignited, it came all the way down here. It's coming right back up. Let's see where it closes. Okay, and US 30 can continue maybe to try and break this high. Same with NASDAQ. Okay, markets are opening up now. Nasdaq bullish, 3-bar play. This is what's called a 3-bar play. Green, red indecision, pause candle, 50%, and now we're continuing to break out bullish. Same with US 30. Could continue squeezing. Look at gold. Came all the way down. They probably liquidated a lot of pending orders down there. They probably came down, hit all the stop losses. All of these traders that were in from 1964 holding up here probably just came down and hit all the pending orders, picked up all the liquidity. And let's see if gold continues to maybe close up here and build this area. Yeah, we can see gold maybe break even more bullish up here. Should you always enter when you ever draw an entry? No, don't always enter when I draw an entry. Wagma, you need to decide what you want to do for yourself, okay? Just because I'm showing you an entry doesn't mean you automatically have to go in. You gotta, guys, you gotta use a little bit of your own judgment, okay? Don't always, it's up to you guys, okay? I don't want you guys just to do that where I draw a green box, because if you did, you went red right there and you're in drawdown, okay? I'm putting this there to show you that that's an area of interest if volume closes below. Okay, so here's the close, guys, in 60 seconds. Nasdaq is pushing bullish, might push up to the next daily, 15,250 yellow line. We're trying to break, continue to break here. Is GBP JPY a buy? I have no idea. Am I on GJ chart? I'm not on GJ chart. How can I tell you it's a buy? Come on, guys. Let's focus what's going on right here. Okay, so here's the close. So please watch the security you're trading. Okay, so what happened with gold? It closed right inside this consolidating box. So they came down, very bearish, hit the pending orders. Now we're right back inside here. So we got to wait up here or we got to wait down here for gold. Okay, it's still in this consolidated area. Might come back up. Let's flip this zone red. Okay, it's coming right back up. Test here. What is US 30 doing? Okay, I know a lot of you guys see the RSI indicator. Okay, it could just cool off and go right back up, or it could start coming down, but kind of got to wait for it a little bit. Okay, so that was a buy side, filled up the range right here. If I'm looking for a sell now, I'm going to start to lower it down into here. Here's where it might consolidate now, in between here. Okay, so gold is still inside here. We're waiting to see where it can kind of close. There was a big initial open right at market open, at the COMEX open. But it's kind of like Wall Street open, okay? Made its big move, but let's see where it will settle down. You might have to give it 5-10 minutes. Okay, so this is for the buys, this green box for the buys. But you got to do something up here too. The buyers, if you're buying, make a decision here. It's giving you multiple attempts at this red box to think about your position. US dollar is dropping 102 right now. Okay, so it's possibly going to break 102. So I know some of you guys, if you guys are in GU is probably pumping. Okay, I haven't even looked at the chart, but I'm just looking at correlations. We'll get to the chart in a few minutes. Okay, now we're starting to see US 30 get rejected 1 time, 2 times, 3 times at this big supply area. So that's why you got to learn, guys, when that happens, if you're in profit, you might need to learn maybe once in a while how to scale it a little bit, because there's no guarantee it's just going to hang out here, pick up bids, and continue driving. This thing might come tumbling down. You got to make a decision, guys. Okay, gold is just right in that consolidated area. We've got to be patient with gold. Yeah, and guys, yeah, thanks Ian for pointing that out. It's 30 seconds to go, and we have a new 30-minute candle opening the market 8:30, guys. Okay. Okay, so again, aggressive scalpers, if you're looking for a sell, you want to look for a sell below here, and then maybe it will push all the way down through here. But let's see how this is going to close. So with Nasdaq, same with gold. Gold is right inside here. Okay, so got to be patient with gold. Here's the close. Okay, so they opened it red, ignited. Let's see if it pushes down a little bit, takes out this low. If not, maybe pick up a wick and come right back up for like a double top in here. Nasdaq is green. Okay, another pause, 50%, bullish ignited candle might come up. Nasdaq might be coming up to hit up here. Gold is ignited too, coming right up to that daily purple high, the previous daily high. Okay, so volume is still inside here for US 30. Volume for gold is still kind of inside here. Just got to continue to be patient and watch where it's going to move. If you're trying anything out right now, maybe smaller trades, guys, speculating. Unless you guys have confluence and you know the direction it's going to go. But for other traders that are undecided and you want to trade, maybe go a little smaller, or just wait on the sidelines. I'm not in a trade right now myself. I'm waiting myself. Okay, so gold is coming right back up. Okay, so it's going to close in 2.5 minutes. Again, we're looking for maybe a closure above here, maybe a retest where we can flip this red box green and maybe continue, unless you guys are already in buys. But that big candle at COMEX came down, kind of liquidated a lot of pending orders, maybe picked up that liquidity, and now coming right back up. So you can buy with it. But again, you're buying an impulse candle that's breaking out before it closes. So just be aware of that. US 30 is continuing to the upside, same with NASDAQ. Okay, so no sells, no sells, no sells. Okay, but this is what can happen when you enter on candles before they close. This is what's an impulse. See where it came up green and it got rejected again? That's why I tried to warn you. You got to be careful. You got to know what you're doing, okay? Otherwise, wait for it to close. I know it sucks. I know you see a big green candle and you want to get in, FOMO, all of that fear of missing out. You got to hit that buy button. Sometimes if you just wait for the body to close, I don't know how else to explain it, okay? Yeah, you might miss out on a couple moves here and there, but if you didn't know what to do with that green candle, you're in drawdown right now. I don't think a lot of you would have taken out maybe 6-7 pips of profit. So now you're holding in drawdown, possibly going to get your stop loss hit. And then look at how it flips as a shooting star. That's why you got to be very, very careful, guys, okay? So let's see where this is going to close. This might close near the low down here, and it might be bearish coming down here. Okay, so that could have been a trap to trap all those buyers. You know, if you're an impulse trader and you don't know what you're doing, that's why I say you got to practice over the weekend and learn. If you don't know, wait for the volume to close. There's nothing wrong with that. And don't trade with the woulda, shoulda, coulda. Okay, I can say that right now. If I took that buy, I would have been in drawdown right now. I didn't take it. I made up my mind that I'm waiting for the candle to close. So therefore, I'm not even woulda, shoulda, coulda anything. I'm waiting for it to close. That's what trading is. You need to have a plan every single day. You gotta have a routine and stick by it. If you're going to take impulse candles, make sure you know the implications of those trades, what can happen. So you're not guessing or you're not panicking after. You got to know exactly what you're getting out of these markets. It is a business, Anton, I agree with you. Trading is a business. You got to treat it very professional. If you're here to play games, then good luck to you and your account. Just trying to be straight and honest with you guys. Okay, so did we close below here? Not yet. So it's an ignited red candle coming down. This is where maybe it could be an impulse red candle breaking down here, but it could just come down again, pick up volume, and come back and close in here. Okay, so we're right in this consolidated area. It's not the best area to be trading. So we got to continue to be patient unless you want to take maybe an impulse candle breaking down if it breaks this trend line and then maybe drop down here. NASDAQ is consolidating. Green, red, but it came in, it tapped the daily. So if you were in buys on NASDAQ, it came right up to that daily. Got to kind of make a decision up there. If not, you're going to hold in a possible pullback. US 30 might test that high of the day up there and continue breaking, squeezing to the upside. I have weak audio. Turn my volume up. No, I don't think so. I think my audio is perfect, and I'm not going to start shouting here. I got kids that are sleeping. Okay, so gold is breaking down. US 30 is squeezing out. Okay, nothing closed below here. Caught wicks. Still going up bullish to new charted territory up here. But make sure you got a trailing stop loss moving up with it. Okay. Okay, gold now is breaking down. 3 more minutes. So what we can do is we can also watch on the 1 minutes. Okay, so we're watching on the 1 minutes now. Gold to see, will it close below here? This candle is going to close right now. There's the close. Okay, so we can flip this one. It's ignited red. I'm going to sell gold, guys. I'm going to sell gold right now on this 1 minute candle. I'm going to enter on a sell. Okay, and we'll go back to the fives. Okay, so I entered on an impulse. I'm entered on that 1 minute candle. I'm going to follow this 5 minute volume where it can actually close. Okay, so I'm in a sell now. I'm going to look for gold to come down to the previous wick, okay, and then break it and maybe come down to this green box, which could be 12 pips, okay, and then if it can break maybe there and then come down to that hourly, could be about approximately 20 pips. Okay, so I'm in a sell on gold. Could be maybe a head and shoulder pattern, left shoulder, the head, the right shoulder. They came up, they pushed it down. Yeah, they're going to be pullbacks. Okay, so my stop loss is above this structure over here. This is entry number 1. It's a smaller entry to feel things out, and then if I like the way how if it closes down there and gets retest, I'll go entry number 2 and I'll add a second sell on gold. You want to try and go in slowly when you're trading. Okay, and US 30 is continuing to break out. So watch the close. Okay, it's the daily purple line breaking. Yeah, gold is pushing down, but we need to close in the next 60 seconds to close below here. Maybe we'll get a retest and then another push down. Maybe we can also add like a second sell position, but we need to see where it's going to close. Okay, so we're pushing down. I'm in profit right now, guys. I have a 1 pip spread with gold, 1.2. Okay, so I kind of took there. It's coming all the way down. Let's see how it's going to react in this green demand box. It's going to close in 30 seconds. So remember, gold is very erratic. Okay, so it can close down here, might open green and come all the way back up to retest this red box. So let's see what happens here. Okay, so here's the close in the next 15 seconds. Did we break the low? Yes, we did. We broke the previous low. So we took a low, we made a new lower low. That's important to continue a trend pushing down. But what's very important is where this volume is going to close in the next 2 seconds right now. Here's the close. Did we close near the low? Okay, we closed near the low, ignited red bar. Let's see if we can break the previous low and take out this green box. Okay, it's ignited. Remember that. Now it's turning. Okay, so turning green. Kind of equal low, coming back up. So we got to judge where it's about 50%, like right here, the red box. It might come all the way back up. That's what I was telling you. Gold is very finicky, very erratic. Could come back up green, could get rejected. If we can keep it small, doji, like down here, then maybe more offers can continue to take out these bids and drop gold and break this 1964-63 area, this green box, and drop it down to this hourly. Okay, but you see now what happens? What gold can do? Come for the retest. Okay, that was like a 8 pip move. Okay, remember I got in early. I took the impulse and it came down 10 pips. Okay, but now you see the official retest. So this is what scalping is, guys. 10 pips, you can pip and dip. If not, we're holding the trade. We're seeing it came back up. This is gold. It pulls back, pulled back, testing the trend line, got rejected, testing the red box and got rejected. So you got to kind of follow this volume of the candle where it's going to close. It might close inside here, might consolidate a little bit, might continue to push down. This could be finishing off like the right shoulder for the bigger drop down in here. Yeah, US 30 is bullish, guys. US 30, you don't short it right now. It's breaking out, it's squeezing. Okay, so half of this candle is exhausted. This is a 5-minute candle. 2.5 minutes have already gone by. So what did it do? It came down, made like equal low when it opened up, came all the way up to retest the red box, getting rejected. So we just got to thin out these buyers again and push this down, back down to low and break this. And this is going to drop for approximately maybe 20 pips, maybe more. Let's see. But we got to continue with this selling pressure, pushing this down. Okay, for potential sell now on US 30, maybe below here. If you're in a buy, you continue to move your stop loss at each successive higher low if you want to preserve your profit. Okay, so see how it almost turned into a bearish pin bar? Every time we're coming down, it's got those last minute bids down in here, okay? That's why the close is going to be very important. Where's my stop loss for gold, or where's your stop loss for gold, Miranda? You need to learn where your stop loss is, okay? I use structure when I trade, okay? So stop loss could be above this red box, or you could be above this previous high that got rejected, or some traders are above, sorry, let me get rid of this green box, are above here, okay? So stop loss, you can be up here, you can be at 1968, you can be 1967 for a stop loss, you could be 1966 for a stop loss, you could be right here for a stop loss, 1966 right there. Wherever you want, guys, that's up to you, okay? Wherever you feel comfortable. How much are you willing to risk on this trade? Don't worry about what I'm risking. It's got nothing to do with you. You got to figure out how to do this yourselves, guys. Stop asking other people where they place their stop loss, this, that. My stop loss might be completely different than yours. Okay, what happens if I was risking more and I have a bigger account than you? You could potentially do damage to your account because you have a smaller account. So where my stop loss is doesn't really matter where yours is. You gotta understand how to learn structure. I'm just trying to help you guys. I'm not trying to be rude, but I want you guys to understand that everybody, like, do I ask Rob Mack where his stop loss is? No, because his stop loss is completely different than mine. So it makes no difference, guys, okay? But number one, you can go to a break even right now, okay? How about that? If you want to go to a break even. I took the sell right here. It just tapped down there for about 15 pips. No, sorry, 12. Right down there. I thought it was maybe going to be 15, 13 down there, but it may rotate right back up. So this is now, we're consolidating in here now. So if we bring this zone down to here, this is the right shoulder. Okay, remember what we were talking about. Left shoulder, the head, the right shoulder. So now we're inside here. Okay, so now we want to see it break this green box. This is where it could go 15, maybe 20 pips coming down to the hourly right here. Okay, but again, if you got your stop loss here or above here or here, you're still in the trade. You're giving it room to breathe. Remember, guys, hopefully today is not everyone's first day trading here. You know that there's pullbacks in the market, okay? I hope this is not just news for everybody. Things come down and look at what's going on. It's going right back up, okay? It might come back up, but it might be a lower high, okay? It could also maybe break this high and come up to here. And then maybe there's some people with tight stops in here and the market knows that and will come up here. Then when it gets up here, then it gets rejected. But there's other traders with stop losses above here that are not getting triggered. There's some traders with stop losses above here. So it all depends on how much you're willing to risk for your potential reward. And then some traders, they look for this. They sell. When it comes down 10 pips, they're out. That's another thing. So some traders are maybe asking, Ron, where's your stop loss? I might even be out of the trade right now. Got my 10 pips and dips right out. And then if I say to you guys, I'm taking my trade out there, then 99% of the people on the call might take out their trade, and then all of a sudden it drops 10 more pips down here, and then they're going to say, oh, Ron, why did you take out? So I don't want to be responsible for any of that, okay? You guys need to manage your own accounts. When we're not trading with SST, you guys are trading alone. You got to learn how to do this. That's trading, guys. You need to make snappy decisions. If you want to scalp 1 minute candles, you should see how fast you need to make decisions real quick. 5 minutes are a little bit slower, actually, for me personally. That's why I give you guys targets from here to there. Remember we took the ruler when we were measuring to the green box, said it was about 10-12 pips. It filled 10-12 pips. If you don't do anything down there, then you got to still hold this and you got to go through the motions. Did it come back and make a new higher high? No. So it's still down in here. So it's still consolidating. Okay, and then what do we have, guys? Instead of asking where's stop loss, where's take profit, follow the volume, guys. Everyone is failing to look at what's going on in here. Okay, this is the most important thing about trading, is what's going on right now. Okay, look at it. It came up. Is anyone asking, why is it a lower high than over here? Why did it break a lower low? Why is the volume down here now almost in a shooting star candle? These are the questions that should be asked right now. Okay, so we got 45 seconds to go. Let's walk through the motion. We opened, we came down, we made the low, we came back up. It's a lower high, beautiful rejection as well. So if you have your stop loss here, even a tight stop loss, we're active, guys. Now we're pushing down. So here's the break. Now we made a new low. We're piercing through this support line. We have not broke this support line since 6:30 a.m. Eastern. So this is a big move in the market for gold. Okay, so let's see. It penetrated through. Let's see where it's going to close in the next 20 seconds. This could continue to drop, and then we're going to get maybe 20, maybe 30 pips out of this trade. Let's see here. Yeah, there's a nice drop. Okay, we're closing strong. Let's get ready to flip this green box red if we close below here. Make sure you guys are doing this. Okay, instead of just asking questions, where's this, where's that, go through the motions. Learn how to do this. There we go. Beautiful, guys. Tap there. It's 20 pips. Okay, right down there. Tap the white line. That's the hourly. Okay, so it tapped it, cut a wick. Now here's the pullback. Okay, but that's 20 pips from there to there. 21 pips. Now it's coming right back up to maybe retest the red box or come into right here, 1964.50. Half of the move right here. Okay, when it comes down to 20 pips, you could have scaled out right there. Because if you don't, welcome to trading gold. Gold is very erratic and it loves doing this. Okay, it goes red, tap, and then come up green. And then now you got to go through the motions again. If you want more than 20 pips, you got to go through this. See that red line where I just placed? No one is asking me, Ron, why did you place it right there? Okay. You got to learn what you're doing here, guys. How do I know where to take profit here? Did you just join this call right now, or like, oh my God, I feel like I'm wasting my breath here every single day. I don't know what else to say, guys. I'm really sick, and I can't. These are tough questions for me, because we did 3 charts. Okay. I said right there, do you see the ruler from right here to there? It's showing 21 pips exactly. I entered this trade right here on the 1 minute. I told you guys, I am selling right here. You could make a decision at that green box. If you didn't, it came all the way down to here. Okay, that's 20 pips in and out, pip and dip. If you don't want, you got to go through these motions now. I don't know how to make it any more visually clear to anybody to see where to take out profit. I don't know how else to do this. Okay, and if you don't do anything down there, remember, this is a white line. We did our top-down analysis. This is an hourly, okay? So this higher time frame holds more weight than 5-minute volume. So am I surprised that it came and tapped in this white line and bounced? I'm not surprised. Maybe you guys are. I'm not, because I've seen this a million times. Okay, but we're going through the motions again. Okay, so remember, if your stop loss is above here, have you been triggered? No. The volume came up here, but it's a lower high. They're just coming up to grab offers. They're just coming up to grab more liquidity. Okay, watch now. If this closes below here, this could break this hourly, and this is going to drop for maybe 30 pips coming down here. I'll tell you exactly where it's going to come down to, so pay attention here. So you know where your next TP is. Could be coming right down here. See where I placed that arrow? Right there. See those bodies right there? Where it used to be resistance. If I bring this red line, watch what I'm doing here, guys. Pay attention. Instead of just asking questions on where to enter this or that, I'm showing you exactly where your next TP is. Okay, right there, 1962.23. If we break this hourly, has momentum to come down here, and then you can probably net 30 pips. But number one, okay, if you're in the sell with me here, okay, original stop loss is above structure. You decide where you want, what structure you want to use, and you should be now, after 1 rejection, 2 rejection, 3 rejection, they're all lower highs, maybe go down to a break even right now. It's been tested 3 times. Go to a break even and see how the volume is coming now down. We're going to test this hourly and see if we can break it and come down here for 30 pips. Here we go. Okay, it's a shooting star candle. So you cannot be scared of those green candles coming up. You can't be scared. Okay, you got to follow price action. Every time it's coming up, it's a lower high, lower high, lower high. Okay, so like if you're following a live liquidity feed, you're going to see more offers, more offers, more offers are absorbing all of these bids to at a later time to break the structure down. But it's this hourly white line we're having difficulty breaking right now. Okay, so see how we closed like a bearish pin bar? Again, it's going to open up green, but we have this red box here. We're now consolidating maybe down in this smaller range. Okay, it's going to come up again. You notice how gold moves? Every single push down is always a green candle coming up. This is why a lot of retail traders get frustrated with trading gold, because every red move goes back up. Okay. Every green move goes down, green move goes down. This is what you got to learn, okay? This is a different security. This is not US 30, this is not NASDAQ, this is gold. I've traded gold for probably half of my life too. I know how gold moves. Do I trade it as much as I used to? Not really. I've already traded gold. I focus more on indices myself personally, but trading gold, I can trade gold no problem. But you need to understand how it moves. I understand how it moves. So you see every single one of these red candles, it came up green, came up green, came up green, went down red, came up green again, look at where it's getting rejected, a lower high at the red box here. I'm trying to make this as visually clear for everybody to see this. Okay, this is live trading. This is not back testing, everyone. Okay, so kind of where it's consolidating now, we're going to see, can it stay in this zone here, the hourly support, and maybe this red box right here. Okay, so see how we're kind of moving away from this block, we're coming down into here. But it may also pull back up here, okay? But that's if you want 20 pips down there, there's 20, or you can leave like a trailing stop loss and we're going to see it keep running. But if you have a break even, your break even's not activated. You're still live in this trade. US 30 is a monster right now, going right into 9 a.m. right before Wall Street. Okay, so still performing a short squeeze. This red box, flip it green right now. Okay, so I'm going to ask everybody in the group, Zoom, YouTube, what did you guys do with the gold trade? Okay, I remember I specifically said I'm selling right here on the 1 minute candle. Okay, right here. That's where I got in. Okay, so it came down. Could have done something here at 10, 12 pips. You could have gotten out of 20. You could still be in the trade with a break even. Chico, nothing, you reach your goal. Okay, that's good. Nothing wrong with that. Value pipped and dipped, 50% out, and keep 10 pips. Yeah, but guys, you got to make a decision, okay? I'm not here to tell you guys what to do. I could have told you take profit there. I could have told you to take profit there. That's up to you to decide. Some traders like 10 pips, some like 20. Some traders are still holding the trade, okay? And if you still are, it's still looking good. Look at the beautiful rejection coming down. This is probably going to break and go down to 30 pips. I'm still holding my trade on gold. Okay, I'm going to be full transparent with you guys. Why? Because I'm also watching US dollar, DXY on another monitor, and DXY is pumping right now. Okay, the US dollar is strong. So that's why I'm still holding my gold right now. I didn't go in a huge trade, like a huge lot size, because if I did, I probably would have dipped at 10, 15 pips. But I went a little smaller for myself, and it's still good but I'm holding this trade. I'm also watching the US dollar DXY. Okay, and you see when it was really pushing down. Also for you guys trading GU, there's probably a reversal on GU too, on GBP USD. Why? Because US dollar is changed momentum. Brian, 6% gain this week from SST teaching. Unbelievable, Brian. Good job, man. Okay, guys, and I'm going to scale here. I'm telling you. Okay, if it drops down, I'm up 25 pips right now. Okay, so if it comes down, remember I said next target is 30 pips. This red line, it's pushing down right now. Okay, now I'm going to make a decision. I'm happy with 30 pips. I held with all of these. I had my stop loss above here, so I held on all those pullbacks because I know how gold trades, guys. But I want you guys to learn what to do. And now here, I'm happy. 25 pips in here. That's it. 30. Boom. Okay, I'm good. So I'm telling you guys, I'm securing my gold trade right here because it's 9 a.m. now. Okay, I really want to focus now getting into Wall Street. But I'm out 30 pips. If this thing continues dropping, it's all good. I'm out 30 pips. Lisa, you got 20. Wagmu, 10. 10 is good. 10 again. You just keep adding up. Grant, you got 20. Well done. Okay, guys. I'm out. 9 o'clock. I'm out, guys, of the gold trade. Okay. Been home, you got 25 pips. Good job, guys. Yeah, good job. Hey, 25 pips. No problem. But do you see what we did? We waited. You know, there was a lot of fake out candles. Okay, you just got to be patient. Remember that big green one? I guarantee you that sucked in a lot of buyers up there. But we waited. We waited for that body to close. I took an impulse on the 1 minute right there. Okay, so I want to explain that. I went in. Remember, I flipped to the 1 minutes. Okay, so I went in a little aggressive myself. But I went in on this 1 minute candle that was breaking down over here. If I waited, I could have waited for the 5. I would have waited. I would have seen it came down, but then it came all the way back up. I could have got in another opportunity there. But if you guys are still holding, I hope this thing breaks down to the 1960 for you guys. And maybe you can grab 45 pips out of that move. But anywhere in there, guys. I'm just going to clean. Oh, there goes gold. Okay, there it goes. Okay, so now you know the woulda, shoulda, couldas. Okay, I secured. Maybe I could have got more. Again, that's the woulda, shoulda, couldas in trading. That's why, guys, I allow you guys to make your decisions. I don't want to be responsible saying if I got out at 10, 15 pips and then now it runs 30, 40. I don't want to be the one that you all got to manage your accounts. If you like a banker. You need to do account management yourself. SST can help get you into trades and break things down, but when it comes down to profit taking, you need to decide. We'll give you targets. I'll give you targets. I'll show you. It can come down 15 pips, 30 pips, 45, But at the end of the day, it's up to you to decide, okay? We have enough stress that we're dealing with right now in a live trading environment, and on top of that, we got to tell you where to take out profit. That's not our job, guys, okay? Remember, everyone is trading with different lot sizing too, okay? There's some traders that are trading with penny sizes, learning, okay? So maybe you want to hold the full move and learn what's going on. There's other traders who are using with standard lots. There's other traders using Lambo lots. So you know, for a trader with Lambo lots, 10, 15, 20 pips is a lot of money. Okay, yeah, I'm sure that they want to hold for 30, 40 pips, but this is what you got to look at now. Okay, so gold broke. It's 9 o'clock, new hourly candle, and look, it come right back up. Okay, so you got to be very careful. Okay, this thing could come up all the way and take out everything. I've seen it millions of times. Not my first time. Okay, so let's clean up the charts now. Okay, so what is NASDAQ doing? NASDAQ is consolidating right in here. So we're going to trap it going into Wall Street. We'll look for sells below here. We broke once, twice, no volume closed below. So we'll wait for more volume to close below here, or maybe if there's like an momentum pushing down, maybe we get in on a 1 minute like we did on gold. Okay, and what is US 30 doing? Okay, so US 30, just gonna take out these zones now since we're trading in it. I'm gonna just clean up the chart. Okay, there's the purple. So going into Wall Street, I'm gonna see if maybe we can close below that purple line, maybe for a potential sell down in here. See that how erratic it can be? Look, it came up again green, but where did it come up to? The red box and got rejected. So if your break even was right there, you're still in this trade. Okay? You got to go through these motions. I know it sucks. I know it sucks when you're up 25 pips, 30 pips, and then all of a sudden a green candle comes up and you're only up 15 pips, but then it feels nice when it gets rejected and you're back into profit again. It's just, if you want to hold a trade for long distance, you gotta be able to stomach the pullbacks. That's the only difference between scalping and more of a like swing trading. Scalping is just quick in and out, in and out, in and out. Holding a trade to maximize its return is you have to understand that you got to deal with these pullbacks. But if you understand that it just came right up there to the red box and got rejected, and now we got a nice red candle opening up, this could continue to drop. But yeah, at one point you were up 25 pips. That move, you're only up 15, but now you're right back up to 25, maybe 30, 40. Okay, so it all comes with the game. If you can stomach this. Okay, so guys, we are at 9:06 a.m. Eastern. We are 24 minutes away from Wall Street Open. Wall Street Open is a very, very volatile session. Okay, it's probably one of the most volatile opens there is in trading. So I just want you to be aware of it. Okay, if you don't feel comfortable trading the first 5, 10, 15 minutes of Wall Street Open, then you stay on the sidelines. You're a spectator, okay? But you're watching what's going on, okay? You're following the volume. You're following your security. If you do like to trade it and you're learning, use small sizes or a demo to learn. Because you need to understand what's opening in the market. There's a lot of volume flooding in the New York Stock Exchange. Okay, so the equities market is opening up. and there's a lot of volume will flood in the market. Okay, so look at US 30 now. Okay, so it came up two times, double top up here, and now it's coming down, breaking the support level. Same with Nasdaq, pushing down. So let's see where US 30 is going to close. Remember, it can close, pull back up. We're looking for maybe a double top, maybe a retest, and maybe a further push down. Okay, so if you took a gold sell and you got some pips, hit the like button, guys. Subscribe to the channel, hit the notifications, you know all of that. We walked you through that trade live. Okay, I don't know, unless, like, sometimes I look on here, there's 500 people and there's only 150 likes, and we walked you through 4 profitable trades, like yesterday, the day before, and today, and breaking it down play by play. I don't know why we cannot get likes. I have no idea. Last night I had a problem sleeping last night because I don't understand. And then there's other people who are just back testing what happened last week and they get 1,000 likes. Or Kim Kardashian shakes her ass and she gets 1,000,000 likes. We're helping you guys make money. I don't understand why we cannot get likes. I have no idea how YouTube works. It just bothers me. I don't understand why I'm begging for likes here. I don't think I need to beg for likes. It just helps the algorithm grow YouTube. I don't need the likes for myself. Like, I'm a big boy. I don't need these likes for my self-esteem. I need these likes to help grow the YouTube channel, guys. That's what we're trying to do. YouTube is very big. We're trying to grow to get across the world to help everybody who needs a financial education in poor countries. That's our mission. That's why we do this. I don't do this because I enjoy likes. Believe me, I'm a big boy. I don't need likes every day. Maybe I should put a thumbnail of Kim Kardashian's ass on here, and maybe that will get 1,000,000 likes. Or something silly like that. Maybe that's what we'll do. We'll create some new thumbnails of Kim Kardashian's fat ass. We'll put it on here, and maybe that will get thousands of likes. Or maybe dislikes after when they click on the channel and then they see it's trading. That'll be our fake out. We'll do an SST fake out. We'll change the thumbnails. I don't have a camera on OBS, guys. That's why you can't see me. Okay, I'm sorry, guys. I don't have the camera on OBS. Okay, guys, so let's focus here. Let's regroup. Okay, look at US 30 now breaking down. Okay, so it came down. Look at the trend line. Okay, so we got an ignited bar closing down. Okay, this was a nice sell opportunity. Same with Nasdaq. Things are not going to go up forever. Okay, you need to understand that. Things are not always going to go up forever. Now they're coming down. So same with buyers right here. If you were buying this US 30 move, and you don't do anything up here, look at what it takes. It takes about 2 candles, 10 minutes to liquidate you out of your position. And this was a really nice buy, okay? So learn, guys. If this was you that bought that retest candle right there, see that move? It came up 30, 40, even 50 pips up there. If you're thinking you're going to get 75, you're thinking you're going to get 100, look at what the market does to you. It comes down in 2 candles and liquidates you. There's your break even, okay? All of these guys, we're up 50 pips, and if you don't do anything, there's the market coming down and taking everything away from you. So when you ask me, Ron, why do you pip and dip these markets? There's my explanation why I pip and dip out of these markets. Because I didn't start trading today, okay? I've been trading for a long time, believe it or not. And I was this guy that was holding 50 pips. I was trying to get 75. I was trying to get 100. There was some scalps I turned into swing trades that were up 150 pips, 200. And 10 minutes, I saw volatility would come down and take out my 200 pips that I've been working the entire day stressing over. And 2 5-minute candles completely liquidated my position. That's when I said, I'm sick of this stuff. Okay, I waited the entire day babysitting that trade, watching it, and then for something like this to happen in the market. So that's why I pip and dip every time I trade. And I don't play woulda, shoulda, couldas at the end of the day. Okay. I could have dipped out of this gold trade for 10, 12 pips. I would have been happy. I could have dipped out at 20. I would have been happy. I dipped out at 25 and it kept dropping and I'm still happy. I don't care. Okay, guys, I trade like a robot. That's how I need you guys to trade. I trade with no emotions in the market. Like honestly, that's what I've trained my mind to be, is a emotionless trader. I trade like a bot. I trade like there's an algorithm. I trade like a HFT, high frequency trader. I don't get emotionally involved in trades. I don't care. At the end of the day, it's either you make money or you get stopped out or you lose money. That's it. If you're an emotional trader, it's going to really affect you. It's going to affect you long term. You need to learn. Like here, see how US 30 came down to the green box and the yellow line. Sellers, if you don't make a decision coming down there, the market will decide for you. And that's a big drop. That's a big candle. That's 20 pips that you just left on the table because you want more. You want more. But these are levels. These are daily levels. These are not your Mickey Mouse levels. These are daily levels. Okay, and what's gold doing? If you're still holding gold, did gold close above this structure? No, got rejected, rejected, rejected again, and now it's making you lows. If you guys are still holding your gold sell, congratulations. You guys have my utmost respect. You guys holding in all of this pullbacks, that's very, very respectful, and I hope it comes down here to this yellow line, but you got to make a decision too here at the yellow line, because here it's coming down. Okay, that's about a 45 pip move. If it breaks, then we're coming down to maybe this general area right down here. So I'll draw another red line to show you right in here. This was previous price action. You see when gold came down here, went back up, came down here, went back up. So if it comes down again, down into here, it could possibly go back up. But what I would do is trailing stop loss. Okay, remember the original sell was kind of right here. Maybe bring your stop loss like right here. Secure all of this. Look at gold dropping. Beautiful, guys. And see what US 30 can do? They came down. Why? Because they specifically came down to liquidate all the orders down here. They wanted to hit all of these traders that went long right here. Just got liquidated. The market says your liquidity is better in my hand than yours. It's better in my pockets than yours, because I'm going to take this somewhere else during Wall Street. We don't need you. We don't need your retail money in here. We need institution money in here. That's trading, guys. When you learn these concepts, you're going to improve your trading 100%. Okay, so go through the motions again. Like hopefully we're doing this. You guys are getting used to this, okay? So the volume closed below here. Now that green box that used to be support, I'm going to flip it red. I'm not changing the box, the zone. It's still there. I'm just changing the color. That's all I'm doing, okay? Same with here. This used to be a green when we were up there. Now I'm just moving it to red. We are 15 minutes away from Wall Street Open, so we're going to see a lot of volatility, guys. I don't like to be in any trades generally going into Wall Street, okay? So I'm just full transparency. The only trade I took was the gold sell. I'm waiting now on the sidelines myself. I'm out of the trades. I'm now waiting for Wall Street Open, so I might wait another 14 minutes. Yeah, there's a lot of trades to be made. I just follow my rules. You know what I mean? Like I have daily rules. I got routine that I do, so I don't like to deviate from it. If I do, I'm going to trade something very, very small, speculating. But I just generally like to be out of trades before we go into major sessions or news. You'll probably never see me going into trades during FOMC. You'll probably never see me going into trades before NFP. You'll probably see me not in trades going into Wall Street. You'll probably see me not in trades going into Power Hour. It's just the way how I trade. I trade after the fact. I like, for an action, there's a reaction. So I like to be a reaction trader. because there's been too many times where I've been going into Wall Street in good profit, and then for Wall Street to just open up and take everything away in second. So I don't play that game anymore. Zahiria, you were wondering how was my first week and month of trading? You're asking me my first week of trading? My first week of trading ever? Probably 15 years old. I got my dad to open up me a demo account at 15 years old. That was my first week of trading. Am I allowed to say that, or am I going to get my dad in trouble? Guys, please don't say anything about like my dad doing anything for underage or whatever trading. My dad is 80 years old. Leave the man alone. I asked him, can you open up me a demo account? I needed his signature, his name. He agreed and he did it. But I'm happy he did it because I learned a lot at 15 years old. Yeah, guys, I was demo trading by myself at 15 years old, believe it or not. Look at gold, guys. Okay, again, pull up, green, rejected, and look at it come right back down to this daily candle. Okay, NASDAQ. Look at this, just liquidity grabs, guys. They liquidated all of these buyers right here, picked up all the liquidity, and coming right back up. So let's see if now Wall Street is going to do like a double top. Okay, this is interesting now. Okay, so I'm just gonna get rid of these green boxes. We'll clean them up going into Wall Street. I just personally don't want anyone to think that I'm trading right before Wall Street. Okay, so just getting ready over here. Gold is coming down to a daily level right here, 1960. And if it breaks here, the red line is the next target. Okay, just heads up if you're still in gold. Now, see this level? Okay, so I'm just going to bring this over here. If gold now, during like Wall Street, closes above this red box, then maybe we can look for some buys above here. Okay, it tried multiple times, but got rejected a lot of times. But if it brings up big volume and we close above here, this could be maybe a potential buy opportunity on gold. And then we can take it maybe back up to here. Okay, so that's just an idea for later on. But right now it's still selling. Right now gold is still selling. So yeah, now the woulda, shoulda, couldas. I got out like in here. Should I have held? Yeah, when I look at it now after the fact, I should have held. But I just look at my MT4. I made money. That's how I look at trading. Maybe that will keep you from just like, I don't know, emotions. Phil, no, I'm not in any trades right now. I'm out. Okay, so you can see how crazy indices can be. That's why, like even sellers here, if you didn't do anything selling down there and you wanted more than 50 pips, I know you want down here, you want 75, you want 100 down here, but look what the market does. Comes right down, tap and go, tap the green box and go right back up. That's trading, guys. I'm sorry. I've seen it a million times. That's why I'm very like, I don't know how to say it, but I trade like a robot. Okay. Maybe it's because I'm a scalper. Maybe that's what it is. I'm not a swing trader. So maybe that's what's the confusing part for most traders is they're stuck in between. I'm a swing trader, I'm a scalper, I'm this or that. I am a scalper. Okay, so that's the only way I trade. So maybe that's why it's easier for me, because when I'm getting into trades, I'm scalping the markets. and I have the mentality to look for 10, 15, 20, 25 pips, and I'm in and out. I don't rarely do I turn a scalp into a longer trade. Rarely do I do that. So maybe that's why I'm very like disciplined, that when I get in a trade, I'm in and out. Maybe because I've only been like a scalper all of my life. I've tried swing trading, it's just not for me. And I know some traders are really exceptionally well at it. Not for me. You got to know your strengths and you got to know your weaknesses as a trader. Okay, look at now the market pumping now. Wow. Okay, this is 8 minutes before Wall Street. So this is an unbelievable move right now. Okay. So it made a new high. Okay. I know RSI, it's coming right back up to 70. But remember, Wall Street does not care about your RSI indicator. Okay, so please guys, I'm just gonna give some heads up about Wall Street because I know we have some new traders here on YouTube. Wall Street is very volatile. Please guys, use proper risk management, okay? Please trade with a demo if you're learning, or trade with the smallest sizing that you can with your brokers, normally like a micro size, 10 cents a pip if you're just testing, trying out. Remember, it's Friday. Fridays can be a lot of fake outs, or they can be a lot of squeeze days. We've seen, but that's more in the mid-afternoon. That comes more with like 12 p.m. Eastern, 1 p.m. Eastern, 2 p.m. going into the close. This is Wall Street right now. Look at gold. Okay, so gold came, tapped that red line, and continue break. Okay, so gold, guys, if you're holding that trade, that's an unbelievable hold. Okay, you guys are up approximately 60 pips from there. If you guys are still holding that, congratulations. But please reward yourself a little bit, okay? Because gold could come roaring right back up, and you're gonna leave 50, 60 pips on the table when you can use that and you can go into the weekend with a smile on your face. Okay, so now I'm going to set up my chart now. Okay, so I'm looking for, if there's going to be a sell in Wall Street, I'm looking for it to continue to come back and sell below there, and then maybe push down. Okay, right now it's huge bullish. Okay, so it's gone. I could even maybe lower it right there. Okay, look at where 50% is. 50% is the daily. So if I want to get real aggressive here in Wall Street, I can get aggressive right there. Just going to move this. Okay, so maybe I want to be below the daily for NASDAQ if looking for maybe a potential sell. Okay, and there's going to be a lot of whipsaw action. There's going to be a lot of crazy erratic candles. Might be a clean open, we don't know. We just got to take it candle by candle. That's the way how we should trade. If you're in gold, trailing stop loss if you can. Okay, please trail your trade if you can. Next daily is right here, 1957. If it can get down there, guys, that's a really nice. If you're holding that, that's 75 pips. If it can get down there. Okay, so that's why if you're trading also before Wall Street, got to be making moves. Okay, you got to understand. Came up bullish, big red candle, came all the way back down here, coming back up. So let's watch where things move in Wall Street. Please guys, use proper risk management. Again, if you're already up today, if you're already up this week, don't throw everything on the market right now and do something silly, because you're going to regret it on the weekend and you're going to be like, why did I do that? Why did I do that? Why did I do that? Just trade smart, guys. Okay, look at yourself right now. How much have you made this week? Some of you guys have made a good healthy profit. Don't go blowing it right now because it's Wall Street open. Maybe just trade with a certain amount of pips or a percent that you're willing. If you lose, you're still okay. That's the only way you guys are going to learn how to compound and grow accounts. or finish challenges or keep a challenge. If you just keep going all in and like, we don't gamble here, guys. SST does not gamble. We don't gamble these markets. We trade very patient. We trade very disciplined. We trade with proper risk management. We trade to compound our accounts for not just a day or a week. It's for months and months and years, so you can learn how to do this the rest of your life. And I believe me, I know you guys can do this. I know everybody here can be the best trader, everybody on YouTube and Zoom. Okay, if I could do it, I know you could do it. Believe me, I struggled a lot, and I figured out a way how to do it, and you can do it as well. Everyone here. But it requires a lot of discipline. That's the only thing I'm going to tell you guys. Some people are really good at learning discipline. Others are very have a hard time learning discipline. Okay, here we go, guys. Okay, look at what Nasdaq is doing. It came all the way back down. It's a huge candle up here. Okay, let's watch. There's going to be a lot of volatility in the next minute and 45 seconds. Okay, so gold, please manage your gold trade. Okay, because I'm going to be watching indices for market open. I don't focus on gold myself on market open, but you guys can. I'll be focusing on US 30 and Nasdaq. Okay, so we have one more minute and it's Wall Street open. So another thing, your spreads will increase, volatility will increase, slippage increases, okay? Everything. So make sure you guys know this when you're trading Wall Street open. Nasdaq and US 30 are completely different securities. So don't think because one is going this way, the other one has to go that way. They're completely different. Remember, Nasdaq is tech, US 30 is a basket of everything. Okay, so let's see what's going on now. Last 20 seconds. Nasdaq is continuing to pump high. US 30 came down, holding the liquidity, continuing to pump out. So this is probably going to be a bullish open. Might come if you're in buys, okay? Could be continuing that bullish momentum, breaking out of here. Here we go. Here's the open. Okay, so it's an ignited bullish candle right away. Tap the high. There's the pop. There's the drop. Okay, get ready. Okay, so see how volatile it is right now. Now it's still picking up the bids, building in here. Okay, look at Nasdaq, how quickly it came down. Okay, so it trapped all those buyers up there. Okay, it's very fast. Okay, try to tell you. Came right back down to the daily, cut a wick. Let's see maybe where this 5-minute candle can close. You don't need to just jump in a trade right now. You can wait it out, or we can go down to the 1 minute. I kind of don't want to go to the 1 minute yet with you guys. I don't know everyone's level of 1 minute trading Wall Street. Okay, but let's just see how this 5-minute candle closes. What happened to Bookmap is I don't have a connection to Rhythmic. It says I have an invalid connection. So I've messaged Bookmap and I've messaged Rhythmic. Hopefully we'll get it sorted out this weekend, but it's not in my control. Technology. I'm not sure what it is. Okay, gold is coming down to a target, guys, down to 75 pips. Bring your trailing stop loss on gold if you can. Okay, so again, if you went in a sell, maybe you went in premature and now it's coming right back up, unless you pipped and dipped. Okay, it's moving a little bit different than Nasdaq. Gold is breaking, guys, broke that daily. So please, if you're in gold, have a trailing stop loss, push it down. That's about an 80 pip move on gold. Okay, so Nasdaq is really breaking down. Okay, US 30, not there yet. Yes, we see a big red candle. So you can be in a sell, okay? I'm not gonna lie. You can be in a sell, but we're gonna watch for the volume to close, okay? I'm gonna make it clear. I'm gonna wait for 5-minute volume to close, okay? Yeah, we're gonna miss out on a few pips here, but we're gonna see where this volume can close because this is very erratic. You gotta be making moves if you're in this candle as well. Okay, we have 2.5 minutes to go. So you see how they came down like equal lows? Make sure you're aware of those equal lows right there. That's about approximately 50% of this bullish candle that started at 920. Okay, you see where it's holding some support right there. Look at gold, guys, okay? So, man, now you know the woulda, shoulda, couldas where I got out. Now look at what I'm watching, okay? Does that affect me? Yeah, that definitely can affect your psychology. This might make me angry now and take a silly trade on something else. So that's why you gotta remain focused. You can't let this affect you. Okay, I know a lot of traders, a lot, that get affected by this, and then it destroys their psychology for their next trades. And then they might start revenge trading because they're mad now. Don't be that person. Be very professional with your trading. Okay, if you scaled out at 20 pips, 30 pips, 40, and it's running 80, there's nothing you can do. There's nothing you can do about it. The markets are going to move regardless, with or without you. Kim, that's the way I look at it. A win is a win. You know, that keeps you. But there's other days where it comes right down to a target and we take the profit because then it comes up. We don't really talk about too much about that. All we talk about are the trades that we could have had. But a lot of traders don't talk about the other day where it came right down to a zone. We secured 30 pips and then it went up and then went reversed. We don't normally talk about those things because those we secure and we're happy. But these things, when we're watching things run, can destroy you as a trader. Okay, so here's going to be the close in the next 30 seconds. NASDAQ, we broke this daily. We're breaking the purple line. Look at NASDAQ. Okay, so NASDAQ is really pushing down. US 30 is going opposite direction. So remember, this is tech related. This is probably a different security in here that's bearish. US 30 is a basket case of everything else. But what we can do is we can watch US 30 if it closes below this daily. Here's the close now. So flip these for a pullback up here. Okay, it's about to break. Okay, if you're NASDAQ, you could be looking for a potential sell. NASDAQ is sell opportunity, guys. Okay. But let's see if it pulls back into here. So what I did was this was a green box. I made it red just in case there's a pullback. Also US 30. Okay, so it's pushing down. I'm going to sell US 30. I'm going to jump in on a sell on US 30 right now. I'm going to jump in on a sell, place my stop loss above the previous high here, and see if it can come and take out this daily. So I'm in a sell on US 30 right now, and I'm going to see if it can come out and take out these lows. Yep, there it goes. Okay, let's see if it can continue to push with some volume down in here. Yeah. Okay, there's 30 pips. I'm going to see if it can take out this low. Okay. I'm going to sell in US 30. Yes, I took the impulse. I'm kind of following maybe NASDAQ's lead. But yeah, I'm at a break even right now. Okay, but I really want to break this daily and these two lows. If it breaks these two lows, we could drop down into here and grab some extended pips down in here. Okay, beautiful. There we go. Okay, so that's a nice little drop for 30 pips on US 30. You can pip, you can dip out of there, or hold it for this break right here. That, guys, that's 45 pips. Sorry, 50 pips is right there. 50 with no drawdown, just taking the red candle coming down. Okay. You can also watch where this closes. If you want 50, you grab 30, 40, 50 pips, depending on your brokerage, how it executes. But let's see if this can continue to push and take out. Remember here, we have one, like these wicks here, 3 wicks. Okay, it's trying hard, but if it's not breaking, okay, it's going to come back up. But if it comes back up, it's still picking up more offers. That's why sometimes if you have a live liquidity platform, it really does help in situations like this. But you kind of got to trust your analysis here that it is still got a lot of red volume and could maybe possibly, yeah, here's the push down. So it's trying one more time. See how it came down really quick and it bounced? So it's kind of telling us right there, yes, there it is. Boom, we got it. Guys, please go to a break even right now or secure on this US 30. But this thing could run down to the purple line and excellent, guys. Wow. Okay, so sometimes there's a time and place when to take impulse candles. This is why I took this impulse. I waited and saw it coming down. Guys, that is a 780 pip move right there. 100, 90. Wow. Okay, Miss Jones. And you guys got to do what you got to do down there. I'm securing. I don't know about you guys, but I'm securing. Okay, I'm out of that trade. Excuse me. Got to be fast with Wall Street, guys. Okay, where are you going to get an 80 pip trade in a couple minutes? Okay, you got to really respect Wall Street because things can go right back up. Okay, I secured. Julian, you're out. Okay, I secured down there. All I was looking for was the new lower low break. It broke and it pushed down to the green box right there. That's an 80 pip move, guys. You got to make a decision down there. Okay, I don't know how much more greedy we can get of getting 80 pips with zero drawdown in 2 minutes. If you want more, then unfortunately this is going to happen. Okay, I'm trying to make it as clear as possible to everybody. Same with gold. If you didn't do anything down there at 80 pips, here's gold reversing back on you. Ian, you got 72 on that in and out. Amazing. That makes me so happy, Ian. I love it. I think maybe me and you got in and out at the same time. Okay, guys, and now if you're out of a trade or you're still holding, we got to follow the close. The close is now in 30 seconds. So we got to continue to follow the close. Mohamed, you're done with 50 pips? Good, congrats. Yemi, you got 50? Amazing, amazing, guys. Julian, you lost 300 before the call. You're back up to 700 now. Yes, good. Now, Julian, please stop trading for the rest of the day. Can you do that for me? Just stop trading for the end of the day. Focus now. You're positive. Go back to learn why you lost 300 before the call. Fix that. And go into the weekend positive, and let's take this momentum into next week. Good. Be done for the day. Discipline. Don't continue trading, because I know what a lot of traders do is they'll trade that $700 and they'll give it all back at the end of the day. Kurd Psycho, I love the name. You made $800 with gold. Man, you got a funny name. I went to high school with a lot of Kurds. A lot of Kurdish people in my high school. Mo, 1600 profit on US 30. Congrats, man. Julian, no worries, bro. We got you here. Free Life 7, you lost money because of fear. You got to conquer the fear. Guys, trading is all about fear and greed. You got to conquer fear. There's other things in life to be scared about, okay? You don't need to be scared trading financial markets. If you're trading with the proper risk management, there's nothing to be scared about, guys, okay? There's other real life problems in life you can be scared of. You don't need to be scared of these financial markets. Okay? You just got to trade smart. That's all it is. If you gamble, yeah, then it's going to get scary. Elaine, you're up big time on a Friday. Good job. Amazing, Elaine. Okay, so you see how we're coming right back down? You see why these purple lines play into the market? Like, look at that. Used to be the high, it broke out, and now we're coming retesting it. So it came all the way back down to the green box, to the trend line, and we're retesting. So if you're still in that sell, you're still holding it, Now it could come up to here or 50% if you want to still hold it. Okay, I don't really hold too many trades when I'm trading Wall Street. Kind of move with the market, and I keep adding positions if things keep moving in the direction. Patrick, am I using magic keys on my phone? No, well, I don't use magic keys, but I use my phone. I trade off my phone. I'm very quick at what I do. Guys, gold. Okay, you get greedy on gold. Okay, you were up 80, 85 pips, and look at this pullback now. Okay, so this pullback is 1956 up to here. That's a 50, 60 pip pullback. You're giving away all of your profit on gold. Don't be silly, guys. I'm telling you. Don't hold these things forever. Okay, unless you have different intent. If you want to hold these things for a long time, don't be focusing on 5 minute candles. Go to the hourly and trade the hourly candles. The hourly candles will give you more of a direction to hold for a longer time. Look at this. If you're just looking at the 5 minute candles, you want to hold this. I know you want to hold this. You think gold is going to go down to 1930. But there's going to be a pullback, and this pullback will take away everything you just earned right here. Nasdaq, guys, is continuing to break. Looks like US 30 is possibly going to break down here and come down next daily. 34420, beautiful area. Let's see it come down to there. Nasdaq, yeah, pushing down. So you see what they do? They kind of opened it up bullish right before market open, right there. Trapped all those buyers, FOMO buyers, thinking, oh my god, I got to buy up here. It's going to moon up to here. And what do? This is what they do. Welcome to Wall Street, okay? This is what they do. They destroy you, the retail trader. Okay, you see what they did. Look at what they orchestrated. Look at this. 920, 925, 930. Look at what they did. They even gapped it out. You know that big green ignited candle? You can get really excited, and then you buy that, you're in big trouble. That's why I was waiting patiently, and that's why I took the sell down here. I took it as it was moving down right there because I was following NASDAQ. I use NASDAQ too as a leading indicator. A lot of traders don't understand why I use NASDAQ side by side. Okay, that doesn't, just because I'm not trading it doesn't mean I'm not watching what it's doing. I follow NASDAQ. Sometimes US 30 is a leading indicator for NASDAQ. So NASDAQ, I saw what it was doing before, but I trade US 30. So kind of give me more confidence to take that sell on an impulse and get that 80 pips move coming down. Okay, look at gold, guys. I don't want to be that guy to say I told you guys. Okay, I don't want to be that guy. I'm on your side, guys. I'm your teammate in trading here. I'm trying to tell you guys not to get greedy down there. Because this is going to happen, and it's going to destroy your psychology as a trader. Could you imagine being up 80 pips right now, and then they come in after your break even, and you secured nothing? It's going to destroy your entire day. It's going to destroy your psychology. It's going to affect the way how you trade next week. You might have a really shitty week next week just because of that trade right there. Promillo, you lost your internet connection, down 30 pips. That's why I don't trade on desktop. I'm telling you guys the honest to God truth. I trade mobile because if my internet goes down right now on my desktop, I still have my mobile. I'm still my mobile trade, and I can activate it. I can close it. I can do whatever I want with it. Yep, guys, markets are bearish right now. Okay. So let's see if US 30 continues to break. Guys, I'm going to go about 15 more minutes till 10 o'clock. I have an appointment. I got to go get some medication. And enjoy your Fridays, everyone. Auspicious, do I use an EMA on mobile trading? What do you mean EMA? The exponential moving average, an indicator? Yeah, yeah, I can use those. The 9, the 200, things like that. But mostly trading price action. But yeah, if you need to add an indicator, add indicators. Yeah, guys, US 30. So did it close? Like, did anything happen above the yellow line? No. Okay, so this is why top down is very important, guys. Okay, that should be a red box. Came up there, rejected, coming back down to the green box, down in here. This might break, fill down to the next daily. But these are zones too with NASDAQ. If you're trading NASDAQ, it's going from one yellow to one yellow. Secure some profits. You don't need to close your entire position. You're riding this bearish momentum, but close a little bit, guys. Reward yourself. Get paid on the way. This is what trading is. Pay yourself. Every one of these candles can be like a little bit of a paycheck. The Dexter, you're asking what the best trading site is. We do this every single day. We give you free live education. We break down the trades. We answer all of your questions for nothing, for a like, and you're asking us what the best trading site is. I don't know. You tell me. Is there better trading sites doing what we do consistently for 3 years? Every single day we're on YouTube, myself or Dave. We're putting in extra time where we don't need to do this to give you guys this free education, and you're asking us what the best trading site is. I believe personally SST is the best trading site. Maybe I'm wrong, maybe there's others, but the consistency that we do, I don't know about everyone that can keep up with this. There's other sites that charge you a lot of money just for this analysis. A lot. Believe me, I paid for those courses. Back in the day, I'm not saying right now. Back in the day, if I told you how much I spent on the Toronto Trading Academy, $5,000 for a week of garbage, what they taught me, I would be more than happy to show you what I learned in a week for $5,000. And you guys on YouTube, we ask you for a like. All you got to do is move your finger from the MT4, from a sell on gold or from a sell on US 30 to just hit the like button. That's all we ask for. It's not your fault, but what do you think we're doing here every single day? Like, do you not think we're a trading site? Do you not think we're teaching trading education right now? What do you think we're doing here? I'm not being disrespectful, but I'm just trying to understand what's going through your head. What do you think we're doing here every day? We're trying to educate you guys how to trade the markets. Free education. This is what it is, a trading site, trading live. Maybe it's because we're not backtesting. Maybe you guys are used to backtesters. I can come on tomorrow or Monday and just backtest with you guys. I can show you right now. What we can do is Monday morning we can open up and I'll talk about this trade, what we should have done. That's what we can do. This is live, guys. Okay, I think some of you guys are failing to understand that. Anyways, guys, that's it for me. I gotta get this appointment. Don't forget, guys, 10 a.m. in 10 minutes. There's this University of Michigan folder. This could change the market sentiment right here. That's what it is. Consumer sentiment report right here. So keep this. It's in about 9-10 minutes. Gonna have a big red folder. So just watch that, guys. Make sure to hit the likes on your way out, guys. Thank you, everyone. Make sure you guys have a great weekend. Relax. Have a good, safe, healthy weekend. Hopefully none of you guys are as sick as me on the weekends. Thanks to Dave for this week. Thanks to PK. Everybody at SST, Yoda, Shahab, everybody, Ian, Rob, all the moderators, everyone helping out, Trista, Forex, all of you guys. Thank you, guys. Hopefully you guys hit some pips. You guys dipped out of the market. Let's take this momentum into next week, and we'll continue, guys. So have a good day, everyone. Thank you, guys. God bless. Jummah Mubarak. Thank you, guys. Have a good day, everyone.
Hey guys, good morning. Welcome to another live session of Stocksnipertrading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please. Secure.
Trading with a perfect broker is the key, which
Happy
takes
Father's
you one
Day
step
too,
ahead.
to all the fathers
At
out there. Happy Father's Day,
AAAFx,
guys.
we have you covered. The future of Forex is
Happy Father's Day.
zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA. EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.